I thought I was done with talking about oil, at least for the time being. However, sometimes investing is a marathon. So continue we shall with Paul Singer. Singer holds degrees in both psychology and law and understands the importance of reading people and events to assess risk. He started his asset management firm, Elliot Management, back in 1977. He had $1.3 million in seed money and since turned that into a $38.2 billion portfolio of assets under management. As we've talked about before, savvy investors can learn valuable lessons from following the footsteps of the big investors. So, following the public records, we find that in the third quarter, Elliott Management made another whopping investment into Marathon Petroleum. So, let's find out why Paul Singer likes Marathon. And as a side note, if you want to answer the question whether you can time stocks, view through the end of this video and I will show you two additional potential investments that I will put up as my argument that you can time the market. With an output of 2 million barrels per day of refined crude oil, Marathon is the largest oil refining company in the United States. It has operations in several segments of the oil business, including core refining, midstream, well to refinery pipelines and transport, and end use customer retail in both the consumer and industrial areas. Marathon saw $96.5 billion in revenues in fiscal 2018 and has a market cap of $39 billion. At the end of the third quarter, Marathon reported earnings of $1.63 per share. This was down from the year-over-year figure of $1.70 per share. However, this was significantly higher than the forecast of $1.30 per share. Revenues were up almost 35% to $31.2 billion for the quarter. Marathon currently pays out $2.12 per share in annual dividends and has been slowly increasing those dividends over the last 12 quarters. The current payment gives a yield of 3.53%, which is 1.3 times higher than the average yield of the S&P listed companies. In the third quarter, Singer bought up nearly 4 million shares, increasing the firm's holdings by 87%. Elliott Management now owns 8.6 million shares of Marathon Oil, a holding worth over $500 million. With 8 buy ratings given in recent months, Marathon has a unanimous strong buy consensus rating. The stock currently sells for about $56 per share, and the $82 per share average price target suggests plenty of upside growth. So let's take a look at our charts of Marathon Petroleum. And we're now looking at a monthly chart on Marathon Petroleum Corp. The symbol is MPC. For disclosure purposes, I do not hold any shares of Marathon Petroleum at this time. Now again, this is the monthly chart going back to 2011, mid-2011, and I'm recording this in midday trading on Wednesday. Now simply looking at the price chart, and you've heard me say this before many times, the important thing to look at is the bottom there in 2011 and then the upward trend all the way through here to the current date. Now, even though the stock has gone well above that trend line and come back down and then back up again to the top here near $90 a share and back down again, that trend line is very positive. Let's go take a look at the MAC here. Now, looking at the MAC, we've got the bottom there in 2011, another bottom here in mid-2016, and then the current bottom here. So focusing on the bottom there in 2016 and the current bottom, go back up to the price chart. There was your bottom, 2016, and the current bottom. So there's a divergence between the MAC and the price chart, and this is a favorable divergence. The bottom here is below the bottom of the current time frame. Yet, of course, in the MAC, the bottom in the current time frame is about the same as back in 2016. That is a favorable convergence. Another thing you want to pay attention to, you can't quite see it here, But you had this bottoming process in the fast line. It moved on up and came back down and then reflected off of that slow line. So you have a little hop here. Now, you can barely see it here, but there's a little hop at this point too. Now, this hop here is a little bit bigger, but it's pretty much the same thing each time, this little hop. So once the fast line completes this bottoming process of the right side of that hop, that's the time to get in because that's when most of the sellers are out. Now you start having buyers coming in. Let's go back up to the price chart. So you had all the sellers moving down here. Once it hit that bottom, you start to get some buyers coming in and you hit this top here. At that point, sellers are thinking, that's it. That's all that's going to happen. And they bail. There aren't as many as in this downtrend here, but you shake out the rest of those sellers into this point here. We may go down and reflect off of that trend line or not. Not quite sure. We're real close. We're within, say, 1/4 of this bottoming. So what happens? You get those last sellers here, and all you're left with are buyers. So the stock is going to head up, and it's going to head up fairly strongly, in my humble opinion. Back down here, once again, the fast line. When this fast line completes that bottoming process and heads up, someplace in here is the time to buy. You see that here in the histogram, just moving on up here, and it may come back down just a little bit and then head back on up. That's your buy point. Here in your price rate of change, you had this attempt moving through the slow line here, and now another attempt. This is probably going to be successful. This is going to precede the bottoming, that second bottoming in the MAC. Relative strength looks fine. It's near the 50 line. Could be stronger, but still you have a nice bottoming process. And I would imagine that this is going to reflect back on up through that 50 line. You can see that here in the stochastics, the bottoming process is begun and the fast line slowly moving up. It's probably going to reflect off of the slow line and then head up into the volume. Volume looks fine. And then the Williams is coming down for now. But just wait, it's going to halt its process, its downward trend, and then it's going to head up. Now, those are the probabilities. It's not a fact. It's a probability. But back up here, I have seen this hop many, many times before. You've heard me talk about it, but I think I'm focusing on it more this time than in previous times. But it often happens, whether the hop is after the fast line comes through the slow line and then reflects up, whether it's before, such as here in 2016, or before here in 2019 to 2020, it doesn't matter. Once you get on the other side of that hop, that's your time to get in. Moving back up here to the price chart, one last look. All right, let's go take a look at two others that I think you're going to be able to time. Okay, LKZ asked me about two others. One being FENY, which we're looking at here, is the Fidelity MSCI Energy Index ETF. This is a monthly chart, goes back to 2014. After this, we're going to take a look at XLX. Now, again, this is in the energy index, and I think this is going to be very similar to what we've seen, say, even in Marathon and some of the other oils. Now, we have this bottom here in 2016, and we have the current bottom. This one kind of stretches from late 2018 into 2019 and 2020. It's a very long-term bottoming process, but pretty much the same. Now, here we have the MAC. You can see this bottom here, and then the current bottom that's forming here. Not quite done. We have more time before this bottoms. But my prediction, given the probabilities that this will bottom, and this level is above the level of the 2016 bottom, yet the price chart is at the same. Again, another divergence, a little bit different than what we just looked at with Marathon, but still favorable. I like the fact that this is bottoming here in this level. It's near that zero line. So if you're interested in oil, The Fidelity MSCI Energy Index ETF, the symbol FENY, is another way to play the game because this is going to be very similar to Marathon and many of the other oil stocks. So take a look at that. All right, let's go take a look at another one, XLX. Okay, I misspoke. We're looking at the XLE, which is a Spider Select Sector Fund, the Energy Select Sector. Again, XLE is in Edward. Now, this is more similar to Marathon. Going all the way back here, you can see a general upward trend. That is very favorable given the level of the MAC at this point here. This level was actually even lower. Now, this level here is slightly higher than back in 2016. So again, we kind of have still that divergence. But the same thing's going to happen here as is with FENY and Marathon and many of the other oils. These bottomings, there, and there. Go back here again, looking at the MAC. We're going to bottom here, in my opinion, the probabilities relatively soon, say within about 1/4, meaning about 3 months or so. Within that time frame, I think we're going to bottom. So if we do, we're going to see that price come through here and head on up. So I want you to hold me to my so-called prediction. If I'm right about this, let me know. And if I'm wrong, call me on the carpet. But in my humble opinion, oil, many companies out there look very good. And the fact that you have so many companies and so many of these ETFs showing very similar patterns, that's the verifications that you want to see in an industry. So I think there's going to be a rotation into oil. You've seen some of the big players, Buffett, Sam Zell, and just as we looked at, Elliot Management, Paul Singer, they're moving into the energy. The reason? Because I think there's going to be a rotation and it's going to come soon enough. But we're prepared. We're a couple of months ahead of time. So just keep watching and be prudent. For today, that's ChewDog Charts. Thank you.